Inflation is back, and it's happening globally. I hope you're ready for the hyperinflation because we're going to talk about this coming up. I'm Lynette Zhang, Chief Market Analyst here at ITM Trading, a full-service physical gold and silver dealer specializing in custom strategies. And let me tell you, they have a strategy for you. You need to have your own strategy, and this strategy needs to put your best interest first. So do not be fooled, because how many times can you be lied to if you do not know the truth? Let's look at the truth. And I want to start with what's happening in the spot gold market, because after all, gold eases as U.S. jobs data lifts the dollar and yields. And why does it do that? It lifts because it pushes the central bank to raise interest rates. And in theory, and this really is just in theory, that means that the dollar is more attractive. So, hey, because after all, gold doesn't pay you any interest. Gold doesn't have to pay you interest. It's the safest thing that you can do. So my question to you is, with these fiat money products, why would you risk your entire principal for a teeny pickup in yield? Why? This is the time to be protecting your wealth, protecting everything that you've managed to accumulate. Don't be fooled, because the Bank for International Settlements says it best. Unlike currencies and debt and everything that is not physical gold and silver in your possession, it's all a debt instrument. It's all contract based. So, unlike currencies and debt, which are claims on foreign governments or institutions, how are they doing these days, really? Gold kept at home is not subject to political manipulation. And man, oh man, do we have political manipulation all over the place. And let's just take a look at part of that. What now for the Fed? It has fallen behind the curve again. The central bank downshifted rate increases too early and now faces a set of dilemmas and another knock to its credibility. It is all about credibility. Fed now falling behind on its inflation fight for the third time in just 2 years, and what that implies for its already damaged credibility. This is a con game. And all con games require confidence, and all levels of confidence other than the public, which has eroded, but it hasn't disappeared because people don't pay attention. And you're watching this, and you're all probably, or many of you are sitting there going, yeah, I tried to tell my family. I tried to tell my friends. They don't want to hear it. No. But you have to be kind and you have to be patient, because what we're trying to do and what you're trying to do for them is to help them have a paradigm shift where they start to look at things just a little bit differently. Because when you do, it's amazing what you see. So it's all about policy credibility, that 2% target. Resuming 50 basis point increases and essentially negating much of the previous forward policy guidance would constitute yet another significant hit to the damaged standing of the Fed. But not responding to a set of unfavorable inflation data surprises is also bad for its credibility. They are between a rock and a hard place. It doesn't really matter what they do, but the reality is they don't even want to try to kick this can down the road anymore. It's too late. We are at the end of this road. So are they pushing us into crisis? Highly likely. And they wrestle with it. Whoa, this new inflation data that just came out, is it just a blip or is it a warning? Well, in my opinion, it's a warning. Last month, We received a barrage of data that has challenged my view that the Federal Open Market Committee was making progress in moderating economic activity. In other words, they want more unemployment and reducing inflation. Now, it was interesting because what the Fed and the committee is talking about is raising the unemployment rate by 1%, which is over 2 million people that would lose their jobs. And that way they would have trouble paying their mortgages, their car loans, their student loans, whatever debt that they have. But hey, then they wouldn't be able to go out there and spend because it's the public that's causing the inflation. It's not the overheated profits of the corporations. No, we just want price stability. What really is their definition of price stability? Because it's different than yours and mine. I would think that price stability means you want prices to remain stable. But when they're talking about price stability, they don't want you, the public, to make choices based upon inflation. They don't want you to ask for that raise. It's okay if the CEOs make a whole lot more money, just not you. It could be that progress has stalled, or it is possible that the numbers released last month were a blip. I'm going to tell you, it's not a blip. It's not a blip at all. It's a warning. Will you take heed? I hope so. Because supply chains have healed, yet their mark on inflation to endure. Bulk of goods transported under contracts are set at higher rates. So what they're really talking about here is oceans, so ships, trains, planes, because of the energy prices. Retail chiefs say the worst is over, but price pressures remain. Remember, it takes a while of working through the system before the impact happens. So what we've got here is the goods inflation part that is kind of going down. But again, the transportation contracts are set at higher rates. That hasn't come through the inflation yet, but it will. Absolutely, it will. Across the board, you have higher costs. So that's going to have to translate to higher freight rates and higher prices for you. Because are the corporations willing to make less profits? Not if they can help it. Now, they might not be able to help it. And I'd say hallelujah to that. Because for them, this has been a huge boon. Huge. And mark my words on this. Higher inflation is on the way. So maybe they'll do 50 basis points. But history has shown that you have to go above the real rate of inflation to really have an impact. You have to have a whole lot higher unemployment. We have to feel a whole lot more pain. And as we get that higher and higher inflation, the public confidence in the central banks, in the currency, in the government declines. And it's been declining for a while anyway. But good, because they are acutely aware of the trouble that inflation is causing. They did a report on it. The fundamentals for household spending appear to be somewhat less supportive of spending growth. In other words, people are starting to spend less because the real inflation-adjusted after-tax income has actually declined. So all those wage gains that they've been talking about, no, in reality, it's the tool that they've used since the beginning of this big experiment. Nominal confusion. You had a $20 bill 20 years ago, 10 years ago, heck, 6 months ago, heck, 1 month ago. We all now realize that it buys a whole lot less, but nominally, they're both $20 bills. So they are both absolutely identical. Don't be fooled by this, because a wage earner in 1971, average wage earner, $9,500, today it's like $57,000, but it takes two. Back in 71, it took one wage earner to support a family of 4. That's that nominal confusion piece. And business loans by banks grew through 2022, but decelerated in the fourth quarter. So the banks are now starting to withhold those loans. Some indicators of future business defaults are somewhat elevated. Isn't that a nice way to say this? Which means that they're anticipating, all those zombie corporations out there that the banks have just kept loaning them money so they could at least pay the interest on the loans, and those loans and their debt just keeps growing and growing and growing. Well, with higher interest rates putting greater pressure, how much longer will the banks allow that? And what this is saying is maybe not that much longer. Also, household loan delinquency rates were rising and mortgage issuance continued to decline materially in the face of higher borrowing costs. But what did we look at in the beginning? The Fed's going to keep raising rates. They don't really have a choice. They don't. But the system is going to go into crisis because both households and businesses are showing signs of debt distress. And you find that in an increase in the defaults. So how are you going to prepare for it? If you hold all your wealth in the system, then you're going to be in deep trouble. If you hold gold, if you hold physical gold and physical silver in your possession, you're going to be able to weather this storm. This is the foundation of your money. It can protect what you've got, what you're going to keep in the markets or what have you. Now, I want to show you something, and before I do, I've brought this up many times over the years, so I don't know when you first started listening to me, but you remember I told you that we need to pay attention to the monetary velocity. That is the speed at which money changes hands. And it is an indication of confidence in a lot of ways. And what you see here is it actually peaked back in, this is like 97. And all down the hill, we have had, even when there have been these little blip ups in monetary velocity, and let me kind of stop here and go back to explain that a little bit more. Let's say that I have, I get a good check this week. And so I decide to take my husband on a vacation. And now we travel, and because we're feeling so flush, we tip the waiter a lot. We give him a good tip. And now the waiter goes, oh, good, now I can afford those shoes for Jimmy because I know that I'm making more money now. Okay, so the money transfers from me to the waiter to the shoe store. So that's the speed at which money changes hands. And it really has a lot to do with confidence in your ability to get more money, or if you think that inflation is going to rear its ugly head and what you're going to have to buy is cheaper today than it will be tomorrow. So it's an indication of both of those things. But in this particular case, okay, look at this. And this is the M2 supply, which is not the broadest base of money, but it's the second broadest base of money. Look at how rapidly this is starting to go up. I said when inflation first started rearing its ugly head, I said that I believe that this is the start of the hyperinflation. And things go slow until they go fast. This is showing me that it's starting to go fast. To me, this is a very, very, very big deal. Because remember, I said, if you think that inflation is going to rear your head, or you notice that there is a marked loss, so inflation is hotter and there's a marked loss in your purchasing power, you're going to try and spend that money as quickly as you can. So because consumer confidence is sitting near all-time lower levels, okay, that's the consumer confidence index, and it is declining again. Now, if consumers lose confidence in their ability to earn more money, they're going to stop shopping. And then what happens to all those corporate profits? The decrease reflected large drops in confidence for households aged, these are the prime ages, 35 to 54, and for households earning $35,000 or more a year. This is not a good sign. It's not a good sign for the central banks. It's not a good sign for a consumer-driven economy. And I do believe that we have begun to enter that hyperinflationary phase, because this bottom one is the Consumer Expectations Index. And you can see that that has declined too and is substantially below where it's been since 2017. This is not a good sign. I don't care what they say, because fewer consumers are planning to purchase homes or autos, and they also appear to be scaling back plans to buy major appliances. Vacation intentions, how much have we heard about all the vacations that people are taking? Vacation intentions also declined in February. So consumers are not feeling comfortable and they're not feeling confident in where they are. And yet, look at this blip up in the M2. So we got to pay close attention to that, which I will. And we'll talk more about this in future videos, I know. Because the Fed's credibility, it's really on the line, and that's all they have. Can you see the system falling apart? You have to believe that they can lead us through this. You have to believe so you stay in the system. That is their real job, is to rob you of your wealth and, hey, get a CBDC and your freedom, rob you of your choices, but have you agree, because when they try and force it, you know it. And they want distance between their policy and how it is introduced to the public. A really great case in point recently, and I've talked about this before, some of you that have been watching me know that, where there was an IMF report, and I think it was in 2015, but don't hold me to that, but where they talked about autonomous driving and smart homes, and the example that they used and how awesome that would be if you miss a car payment, the car can lock you out and drive away. And guess what Ford just recently announced? That they applied for the rights for that kind of driving, that the car can lock you. Now, they don't plan on using it, mind you, but they want that patent. They're developing that technology, but don't worry, they're not going to use it. They're not going to use it until they do. And while I'm not sitting here saying that you should not pay any debt that you owe, that you agreed to, I'm not saying that at all. So don't misunderstand me. What I am saying is you're not going to have any choices. And in the system that is coming up, and especially with the CBDCs and the smart homes and all that, I would never put that on my house. I would not buy a car that could do that, even though when I do buy vehicles, I'm fortunate enough to just buy them. So I don't have debt on them, but I don't like all of the controls that there are in all of this. You don't make your mortgage payment, you're locked out of your house. They got all your stuff. And you got what? Nothing. Bupkis. Takes away your choices. And I happen to know, because there were times, honestly, when I had to do it too, as a single mom raising a couple daughters. You know, there were times when I might have to juggle a little bit to get through the month or get through whatever I had to get through. Well, we won't have those choices anymore. So I'm telling you, we vote with our purse. If you like all of this AI and you buy that stock and you use that product, that's your vote. When you buy gold and you buy silver, that's your vote. This is my vote. When you plant a garden and you have food, water, energy, security, barterability, wealth preservation, community, and shelter, that's your vote. If enough people vote in this direction, they can't do the CBDCs. The CBDCs just wouldn't be that impactful. But you look at what's happening in Nigeria that we recently talked about, And hey, the public didn't adopt the CBDCs, so they demonetized. They went up. No longer money. Okay? They forced compliance. But gold is used in every single aspect of the global economy. They can't do that. Now, they can confiscate, they can do other things, and that's a video for another day. But this is a collectible. It's a different classification. It's out of the system. I can always convert this when I need it into whatever the current currency is. Okay. But the Fed's credibility can't take a soft landing, and it can't take a hard landing either. If it doesn't want to push the economy into recession, too late. We now have I have to take a look at it, but the 210, that inverted yield curve that we've been talking about ad nauseum forever, okay, it's at extremely even deeper levels. Last time I looked, because they're going to do some little things with this video, so it's not going out today, but earlier in the day, it was more than 1% below the norm. That's not good. That's not good at all. But someone is in denial over inflation, either investors or Federal Reserve policymakers. Don't you be in denial. It does not serve you well. But no matter how things play out, the disconnect suggests the Fed has lost its credibility. Shockerooski. Or perhaps it never had it to begin with. Well, yeah, the public just doesn't pay attention. And if that's the case, soft landing or hard, one casualty of this economy could be the Fed's inflation targeting regime, because their theory is, as long as they have credibility, if you believe that their target is 2%, then it'll be 2% because you will put your money forth that way. You won't ask for a raise if you think, 2%, that's price stability. Okay, I don't really have to worry about 2%. I mean, at the end of 10 years, they have a lot of your wealth, but you've agreed to it and you haven't asked for more. So, what happens when the public loses all confidence in the Fed and in the monetary system and in the government? That's what happens during hyperinflation. And they need it because they need us to shift into the new system. And if you think it's only happening here, no. Surprise jumps of inflation are happening everywhere. Recently, France, Spain, heaps pressure on the ECB. But here's the piece that I wanted to point out to you, which are food costs are a particular concern and may be further stoked after annual negotiations between suppliers and distributors. So is this a supply and supply and demand market? No. This is a market that's based on Wall Street making money. It's a trading market. Everything has been turned into a commodity. Why is that okay with you? And do you realize it? Because most people don't. They just live their lives thinking everything as normal as possible, when, in fact, the prices are not based on real supply and demand. We've been talking about that forever in both gold and silver, because a rising gold price is an indication of a failing currency. Do they want you to know the currency's failing? No, they do not. And oh, by the way, silver, SLV had to change its prospectus because they couldn't get their hands on silver, but we still see spot in the 20s. Okay? So they know how to manipulate a market to make it look anything that they want it to look like. And you and I are the ones that pay the price for it. Or we're smart and we take advantage of it and we accumulate it. That's what smart money's doing. That's what central banks are doing, though they don't care about the price because they can just print at will. But not just in France and Spain, also in Germany. Unexpectedly quickens. Oh my goodness, what a shocker. Well, if you're paying attention, it shouldn't be a shock at all. And what the central banks are trying to tell you, and we're going to see if they pull this off, but they are driving us into a crash. Markets better understand ECB's inflation task. And I'm going to tell you, really, the public should understand central bankers' task. And you don't do it by listening to their words. You do it by watching their actions. And they are crashing the system as witnessed by the highest level of central bank buying of gold since 1967, when we were transitioning into a new monetary system. Who knows more about what they're doing than they do? Honestly, who does? Do you understand that central banker's task? Are you prepared for the hyperinflation? Because we need to feel a ton of pain in order to accept what they're going to shove down our throats. And if you aren't prepared, if you don't have food, water, energy, security, barterability, wealth preservation, community, and shelter, what are your choices going to be? But, this is not something that I typically do on air, but it is something that I needed to do today. So I want you to bear with me with this, because I've talked to you about the fact that I've been studying currencies and currency life cycles since 1987, and there are repeatable patterns that happen 100% of the time, 100%. And even though I may be, some people might think that I'm crazy, I just kind of think that this time is not different. And if something's happened 100% of the time and we're in the same place, I don't know, maybe we'll get a magical different outlook or outcome, but I'm thinking we won't. And so I created a strategy actually before I came to ITM for myself that was based upon those repeatable patterns. And because we had so many brilliant people here with so much experience, we all come together and work together to then make that better. And that's turned into the Wealth Shield. And it addresses every single area of that whole strategy. So wealth protection, sustained living, opportunity position, and legacy building. Now, you may not need all of these parts. For me, I do. So it's a very comprehensive tool. It is your plan. It is your strategy. So that no matter what happens, what if you're right, what if you're wrong? If you've got a plan like this in place, it doesn't really matter if you're right or wrong. It just doesn't matter. You're able to take care of your family, sustain your current standard of living, grow your wealth base to expand your standard of living on the other side of this mess. The foundation has to be money because that's what we work for. And we know that inflation by design is built into the system. What do you have? Are you prepared? Because time is running very, very short. Now, if you haven't yet, make sure that you watch our recent Coffee with Lynette video with Clive Thompson. He is a retired Swiss banker and wealth manager, so he's got a lot of interesting things to say. He too believes in the benefits of physical gold and silver and even the collectibles. And as well, we launched a new Spanish channel, so you want to make sure not just to share, but watch it, whether you're a Spanish speaker or not. It's both languages. It's because I speak Spanglish. I'm not very good at it. But we have Fernando, and he is definitely bilingual. And what he does is he looks at whatever was discussed on Tuesday, and then he asks me questions, and we discuss it after that. So I think you'll get a lot out of it regardless, and it might be a good way to simplify for those doubters because it's typically pretty short and it's just pointed questions. Also, make sure you watch Mantra Monday and everything on Beyond Gold and Silver channel. It's not just the Mantra Mondays, but it's also how do you produce food, water, energy. It's the whole shebang. So if you haven't been there yet, go give it a try. And if you haven't done this yet, you really need to, which is if you have not started your gold and silver strategy, click that Calendly link below. They'll go over that Wealth Shield with you and set up your strategy so you are prepared, and then get it executed as quickly as you can. This is not the time to procrastinate or dilly-dally. And if you haven't done it yet, definitely make sure that you subscribe, leave us a comment, give us a thumbs up if you like it, and share, because the simple fact of the matter is Wealth Shields are made of metal in your possession, not paper promises. And until next we meet, please be safe out there. Bye-bye.